All right. Good morning. Good morning. How's everybody doing? We just had the PCE report being released. So we're going to make sure to go over that. We're going to make sure to cover gold. We're seeing some interesting price action right now. But yeah, good morning to you guys all. Let's give it just like one more minute. And then we're going to just start looking at this report. We're going to do our review and talk about what opportunities we might be expecting today, right? What we could possibly be looking for. And for those of you that are joining early, I will give you guys a heads up. Just a heads up, since you're here early, you pay the, what do they say? Early bird gets the worm. I will be doing a giveaway later today, so be on the lookout for that. That's all I'll say for now, but be on the lookout for that later in the session. All right, guys? Oh, and by the way, I'm not sure if you guys were able to check out the new video that was posted. Pretty cool video. We're gonna be doing some more videos like that, talking about forex markets, talking about, of course, deeper concepts. You know, that was kind of like the introduction, we can say. But we're gonna make sure to cover topics like economic data, FOMCs. We're gonna go over geopolitics and really all things that make trading more practical, right? We don't want to just fill our head with noise. We want to make sure the topics that we talk about and the information that we give out is valuable for traders, for you guys to be able to add those concepts onto your knowledge, your trading knowledge, and that's going to allow you to either trade with more clarity or have more awareness, have a stronger edge in the market, more confidence, right? Whatever it may be, that's what information is good for, right? You end up connecting dots and you put things together. But with that being said, guys, let's go ahead and do some technical analysis. But before we go over our technical analysis for the day, I want to make sure we keep in mind that we just had a few economic reports come out. So let's take a look at these reports. Let me just move this for like today right here. Nice. And so let's go over that really quickly, and then we'll take that information onto the markets. And I would like to see you guys tell me what you think of this data release, whether you think it's bullish, neutral, whether you think it's bearish. But I'm going to talk about that in just a second. But again, if you guys can give me that in the chat real quick, just to see if anybody can, not if anybody's paying attention, but more so if you guys are understanding the concepts and the topics and how you would read this data. But let's do that here together. So we have our forecast and then we have our actual numbers. So that's what we're going to be paying attention to here. And of course, we're on Trading Central, the economic calendar, keeping it simple here. We have our actual numbers when it comes to personal income still looking healthy, above expectations. Our core PCE price index, which is really the main reports that we're looking out for, not showing any strong signs or any red flags in terms of like inflation, right? Personal spending just around the neutral forecasted numbers, we can say. So again, no major red flags there. So far, just some optimistic personal income data. And even this core PCE price index, the fact that it's not showing any sort of spikes towards the upside is honestly a good sign for inflation. This core PCE price index as well, 3.4%. That's more on the neutral side. So again, no major red flags there when it comes to the topic of inflation, right? We have durable goods orders just slightly below the expectations. As you can see, it was expected to come out negative 0.4%. But again, we're mainly paying attention to those inflation reports. So let's pay attention to this one. PCE price index, a slight increase above the 4%. But again, I don't see that as a major red flag. And then we have just two more reports. Initial jobless claims coming out just below the expectations. So again, more on the optimistic side. It looks like, again, with these reports, a lot of times it can get a little bit tricky in terms of how you read it because there's so many reports. But again, I think the main narrative here, or excuse me, to give you guys the answer, the main thing you want to focus on is always going to be the main narrative, or any sort of strong or weak, very weak data that shows you new information. What we're looking at right here is, in my opinion, no major red flags or no major signs of rising inflation, right? Let's take a look at how gold is reacting, because I would expect for gold to be having more of a bullish reaction to this, right? Because of the fact that price over the past couple of weeks, it's been very bearish, and it's been very bearish because of that narrative that inflation is rising. The Fed has turned a lot more hawkish, and so we've been seeing a ton of dollar strength, as well at the same time that gold has been dropping, right? But with this report right now, this could, in my opinion, give gold a little breather, especially at such low prices. Like if we look at gold right now on the daily time frame, we're pretty much on this bearish run right now, and we basically have not stopped. Like it's been continuous days where gold has printed further and further lower, just bearish price action, as you can see. So again, at these low points right here, we could see a possible breather for gold, from gold, excuse me. Again, especially with that optimistic report, in my opinion, that we're seeing. Again, no major red flags in terms of those inflation reports. So if that's going to be the case, let's set ourselves up. Because right now, although we might be expecting for gold to give us maybe a short pause, we still have to look at the markets objectively and set ourselves up correctly. So by looking at the markets right now, we're very bearish clearly on the daily time frame, but it looks like price action is having some strong reactions at these lows. This previous daily candle, as you can see, created a wick into this area. We're going to see that more clear now on the 4 and on the 1 hour as well. So we have price action creating some sort of support and a reaction point at this area here of interest, the 39 and 71s. And we're going to look at that on the 4 hour. So daily time frame, not really showing us any strong signs of buyers stepping in, other than the fact that we're creating that clear support at this area. On the 4 hour, we see that also more clear. A ton of wick rejections, candle bodies closing above that area of interest. So we can move that a little bit higher there, and let's see what that looks like on the 1 hour. Okay, on the 1 hour, our zone, rather than keeping it within an area that clearly there's a lot of chop in there, we're gonna mark off the lows for more of like the optimal price point, right? So optimal price point would be more closer to the lows, as always, right? Especially if we're going to be on the lookout for potential buys, as we have right now from a daily. Let's pay attention to this daily time frame, not showing us any bullish signs other than the fact that it's rejecting these lows. We need to have that clear. 4 hour time frame also doing the same thing. It's still very bearish, and we're creating these rejection points. We're clearly struggling to break lower, even from a technical perspective. And if we think about this fundamentally and based off the data that we have right now, I don't think that these reports as of right now are showing us strong signs or giving us higher probabilities that gold is going to continue to break towards the downside, right? As of right now, based off the information that we have technically and fundamentally. That's why I'm thinking today we can set ourselves up for some potential pullbacks on gold, right? At least short term. So again, 4 hour, having those rejections at those lows, and we have also a clear zone at this area right here, basically just where we're trading at. And so we have about 11 minutes until this 4 hour candle closes. Once we start to close above this area of interest right here, we're now closing above, for example, this resistance that pushed price towards the downside there. Let me just move this right here, right? You can see that on the 4 hour price action creating this low. It builds this high, it creates this high for us, excuse me. It builds that resistance and then continues to push towards the downside there, right? So above that area right there of resistance, we could be on the lookout for some pullbacks, possibly at least into the 4040s, 4060s, kind of like what we were looking out for yesterday. Yesterday, we were waiting, I believe, for pullbacks into the 4060s, and price only pulled back just to about the 4040s and then had that continued drop, right? Because that's what we were looking for yesterday in terms of like the sells and things like that, right? So today with the 1 hour as well, we have, if we follow this on the structure point, because we know daily and 4 hour is bearish, but we have the major rejections at this area of interest. That's the only bullish point that we have really going on right now, the amount of rejections at these lows. What we would want to see next in terms of higher probabilities and increasing our chances of seeing a push towards the upside, at least into these areas, the 4040s, 4060s, would be a candle closure above this zone, right? Like we've talked about before. Candle closures usually, from a technical perspective and retail trading space, it gives us those confirmations and confluences to be able to follow price better, at least throughout these sessions, right? So that's what we're waiting for. Further confluences in our favor, stronger buyers in the market, breaking above areas where previously buyers could not break above, right? So it's signaling to us that whatever sellers that were here, that were pushing price lower at this moment, they're not so interested in that price. They might be interested when price gets to this area right here. That's when we can say, okay, maybe sellers are going to be interested in selling the market at a higher price point, right? But a lot of times you see the markets create these waves, right? If you look at how the markets flow, especially when you have clean market structure, you have nice and clean waves, right? So it's gonna come eventually, like I've told you guys before, with market structure, you're eventually gonna start to reverse against that price action. But rather than trying to call that reversal and trying to be the hero and calling the bottom of a market structure, and you're gonna call the entire reversal move, take it level by level and just take the clues as price action gives it to you. So right now your clues would be the lows being rejected, that's for one, but price action needs to start flipping and going against this bearish run, which if we look at a bearish run and we want to start to correct that, we need to start breaking above structure points. So that way we look for price and market patterns on this side, right? That's what we're looking for, meaning above here, that's what we're looking for. Watch the reactions as we approach certain zones. Okay, we're looking for continued buys at those areas. If price action is going to start to reject the lows as it's doing and now start to build this sort of market structure, right? To keep it very simple there for you guys. So that's what we want to look for. We have about 7 minutes until that candle closes. And then let's pay attention here as well to the dollar, because dollar right now is also reacting at an area of interest that we had here towards the left, where you can see the reaction you had here, for example, and it built that support, built that low, it pushed towards the upside before eventually pushing lower. After price made this low here and it did a pullback, it got to that price point of interest right there and continue to push lower. Right now, price action is reacting just at that area, right? So again, we could be right now expecting for dollar to maybe have a slight pause, some slight corrections, right? Some breathers in the market. Same thing with gold. Right now, we're seeing strong buyers in the market right now. Again, let's be on the lookout for those candle closures. Once we have that in our favor, we know what we're looking for in terms of price action. We want to see retests of that area, but let's look at the lower time frames and see if we have any zones really here. Because right now it looks like, just based off the PCE report or the data release at 8:30, the reaction has just been bullish. It's been a strong push up and then small corrections and continuations as we're seeing right now. So I would say, even if price is going to be very volatile, even a push down into these lows can still keep price bullish on the lower time frames. And again, with strong volatility and volume, you can easily see price on the new 4-hour, get into this low and then just absolutely rip going into the next one. We would just want to watch for price trading below this range. That's the only thing I would be cautious of right there. But again, we want to start to build that support and build, or let's say start to see price stabilize almost above these 4010s right here. That way we can just look at price action. We have lower time frames in our favor, right? In terms of like the bullish structure, you have your highs, lows, continue to highs, lows, right? That's what we want to start to see. We want to start to see price moving more in our favor. We want to see price action clearing previous areas where sellers stepped in. Like we have these highs just around here on the 15-minute time frame. So we want to see 15-minute time frames clearing those areas, not really flipping or trading back below into like the 4,003s. All right, that's where things can get a little bit tricky. That's where you see price action possibly just rejecting this area, faking buyers out. You wouldn't want to fight buys at that moment. You'd want to wait for price to give you better confirmations above your area of interest, or even a pullback into these lows where if it continues to reject, I'm thinking price can still push towards the upside on gold because of how strong this support was at right here. So we'll wait for that. So far it looks so good. And then we're going to go ahead and do some US30 analysis as well. Oh, Connie, by the way, sorry, I did not see that. But yeah, you're pretty much on point. I appreciate you answering. I would say that it's definitely more optimistic, more neutral data. How I like to think about it is how I've told you guys before, the baskets, right? If we're looking at a bearish basket and the market has been more bearish when we're looking at gold, and we know that inflation has been that main driver in a hawkish Fed, when we look at an inflation report right now and it does not really add onto that fire, and we have price action giving us signs of maybe a shift out of this bearish structure, I'm going to follow that. I'm going to follow the market and I'm going to look to take advantage of that if I can get the right opportunities, right? If it fits with that's where once you have your ideas start to become, let's say, validated by the fundamentals, whether it's temporary fundamental outlook, right? Because a lot of times you'll see price action do some sort of pullbacks, right? Like if right now we're bearish because of the fundamental narrative being more on the bearish side, right? Higher inflation, Fed is hawkish. That's the main macro driver, right? There's going to be times throughout those weeks where prices, let's say, going bearish, like we're seeing on gold, where you're going to see some reports coming out a little bit optimistic, like one that we're seeing right now. That right there can induce like some sort of pullback on these asset classes, right? Where in the long period, like at the end of the month, when you look at it, it'll just be a short-term pullback that ended up just going to a previous area of interest and then just continue to sell following the main market driver, right? But there's going to be those times that the market will have those breathers, right? So again, you want to be able to see when that's a possibility and how you can take advantage of that, right? So we know what we're waiting for. Let me see this here. And yeah, of course, like we always talk about before, in terms of like this trade, you have to also understand what can invalidate that trade or at least help you time the trade better. If you continue to see that the intraday time frames like the 4 hour, maybe the 1 hour still closing below areas of interest, then that can, I would say, keep us more cautious in case price is going to be rejecting this area. You don't want to fight the market at that point either. So if we start to see rejections off this zone, in terms of sells, I would be just cautious because that would be, in my opinion, pretty aggressive sell off of the highs. I would at least look to get better confirmations. Like, okay, wait for your stronger rejections. Like you saw these 1 hour candles still really closing below with the lower time frames engulfing back below the area, right? But as of like again, right now, still seems pretty solid, especially when looking at like the 4 hour time frame. The 4 hour time frame, let's see if in the next 45 seconds it can stay above this resistance point right here. So let's just wait for that candle to close there. Get myself another sip of water. Gotta make sure you stay hydrated. All right. So we're seeing now 4-hour candle closing still pretty favorable, right? We're now seeing those initial pushes with the new 4-hour candle. So let's see if that's going to continue holding just based off the lower time frames. Because by the way, a lot of times when you see me looking at this computer here is because I have more so the lower time frames usually there, and then I can see the chat a lot more clear, guys. So I don't want you guys to think I'm like distracted or anything. Just gives me a clearer view so that way I can have both pictures here. But again, we're seeing still 1-hour candles closing just at that area. But again, obviously right now price is speaking for itself. We're seeing those pushes and those continuations above our area of interest. This candle alone already has pushed over 100 pips in about 1 minute after seeing that candle closure right there. And we're seeing those continued pushes there. So now what we need to see, after we've gotten that push, we've already seen 100 pips worth of price action moving in our favor, right? Because again, we had the 4-hour candle closing in our favor with a strong rejection towards the downside and engulfing above this resistance. So that's a favorable candle closure. The 1-hour closed favorable because of the fact that although it closed just at like literally the precise point where this candle closed here, look at how strong that one candle was. That's a clear sign that at least as of right at that moment when you're looking at price action, the moment that the candle closes, that's a clear sign that that's a bullish engulfing candle. It's a candle that rejected basically a low, a support, and is now closing at a previous resistance. Again, still at least in favor with this 4-hour that was bullish, right? Let's see, even on the 30 minute also very strong candle. We just saw and we talked about the fact that these reports were not really showing any major red flags for us to see maybe continued sells on gold, right? So again, it's still the reason I point this out, I repeat myself, is so you guys can see that again, it's the exact same things that we talk about and the concepts that play out right here live for you guys. So again, we're seeing those nice strong breakouts right now in favor of our bias here. We're seeing also, again, like I had pointed out earlier, we have this zone, and you see here on the 15-minute time frame a lot more clear. Again, ideally at this point, if we're going to start to break above this area here, we'll see if we can pull back into this zone, have a clean break and retest type of scenario, right? Like for example, you have here your high. We can say this is a low before creating this new high. Price action can pull back into like the 40.15s and the 40.10s, still reject that. We're still going to remain on that bullish outlook because we're trading above an area of interest. What will switch that or flip that bias is once we see price trading back below this zone. It's back below the zone because historically, just by looking at price action, let's say over the past couple of days, this is the area where price, once it closed below, that's where you saw strong seller momentum, right? So that's what we'll follow. But as of right now, we're following still those buys on gold. Dollar still, like we had said earlier, basically just paused, rejecting the resistance there. And zoom in a little bit more there. Right, so it's having a little bit of a pullback, right? It's nothing out of the ordinary, we can say. It's not us trying to sit here and say, you know what, gold is now going to be bullish for a month. It's nothing like that. It's more so, again, structured level by level thinking. So you take it day by day, step by step, rather than having to jump to any sort of conclusions and marry a certain idea or a thought. So now that we've had basically that move completed there on gold. Let's go ahead and pay attention to US30, do some analysis there, and see if we can get some opportunities on that as well. But let me see if any of you were able to capitalize on some of those buys right there, because that was a strong, nice clean move. And even on like the lower time frames right there as well, like that slight pause, that beautiful retest on those lower time frames, and the breakout above here at that 4-hour candle close was super clean. The retest and the breakout was super clean. So now let's go ahead and do some US30 analysis here. So US30, kind of just to follow through on the things that we have been talking about. We understood that the daily time frame has continued to be bullish, especially as it's creating this continued structure. We have price action continuing to trade close to all-time highs, and especially right now, we are pretty much very near all-time highs on US30. Excuse me. So daily time frame is bullish. 4-hour time frame looks to be bullish as well, and also because we're trading above that area of interest that we were talking about yesterday, right? We wanted to make sure we closed above this range high, so we didn't see price just stuck within this chop and within this 4-hour very messy and choppy price action, you can say, right? So that was for that on US30. It looks like price action basically went and retested that area, built that zone, and has continued to push. That's basically what we're looking for on gold, right? The breakout, the retest, price action rejecting that area, building that support, and showing that price is clearly stable above that. That increases those chances of us seeing a push higher, and then you have your continuation, right? Now, let's look at that on the 1 hour and see what zones we can mark out. We can mark out the zone basically that we're at right now, just around these highs. Where's my tool? There it is. Basically right here, right? This is going to be an area of interest on US30, which would be the 52,000s basically. And then we have the 51,880s, these lows right here, for us to continue following this clean bullish structure that we have on the 1 hour as well. Because we have macro time frames like the daily more bullish, 4 hours bullish, especially trading above this 51,800s area right here. And then on this 1 hour, we can see also after this pullback took place, we have now price creating highs, higher lows. We have new highs, but still not breaking above these. We have lows being created, so not even a full pullback into the zone, just now a continuation, breaking above this area now. So still showing further signs of buyers in the market. Again, with that optimistic report, I don't see why fundamentally we could see a sell-off. But in terms of preparation, if we're going to see stronger sells from a technical perspective, that would be below those 51,800s, because that would be price trading back inside this range, right? You would want to adapt to that price action. But right now, what we're seeing is continued bullish price action. We're just right now pausing at these highs right here, but we're following this right here. Maintaining above this zone of interest would keep us bullish and keep us still pretty strong on the momentum. But we ideally just break out into these highs right here so we can go and retest basically those all-time highs at the 52,200s on US30, right? I think that's a strong possibility, especially seeing how price is slowly pushing towards the upside here. The less of a pullback we do, the better chances we have of us just seeing a strong breakout going into this new, going into NYSE opening, I would say. The pullback here would be tricky because it would be pretty aggressive, pretty volatile. So that's why the most optimal move is going to be just a breakout, especially understanding how strong US30 moves during those NYSE openings. We have already multiple times seen within 30 seconds, price action on US30 making a full move, right? Gold is not like that every day. Right now, we're seeing that, but we just had economic data being released, right? We have new information being priced into the market. If you guys watched that new video that I just posted, and I've said this to you guys before as well, it's about money moving based off that information, right? When you ask yourself, okay, what is moving these markets? It's money, right? At the end of the day, that's what it is. It's money, transactions. The buying and the selling is what's moving this right here. But how that moves at a macro scale is through information, right? Obviously, you have algos and all of that, computers basically doing all the trading, but that's still designed by humans and designed to move based off that information, right? To protect capital, to preserve profits, to look for more profits and invest in riskier assets. That's all transactions, right? So when you have new information in the markets and you see that price action is now behaving different, you can't sit here and act like that's random. You can't sit here and act like that's a technical reasoning, because you have to be real. You have to be objective and see what it is. You have to see for what the market is telling you. Again, it wasn't price rejecting these lows and then all of a sudden at 8:30 precisely, you break towards the upside, and then you have price action continuing bullish. You can't sit here and lie to yourself and say like, oh yeah, that's because we were rejecting support. Because again, you know that that's not the reason. You know that it's information that, again, it came specifically at 8:30. Go and look at other asset classes at 8:30 right now, right? So again, you can maintain that composure and that clarity when it comes to these markets. Okay, so you're definitely okay. Katie, yes, good morning, by the way. Thank you for that. You're well in profits, I would say 51,880s, super, like on this pullback, I'm assuming. Nice. Now we're just waiting for those continuations. I think right now, other than the fact that we're just rejecting these highs, like let's see the 15-minute, yeah. 15-minute clearly creating this resistance here. Right now we have wicks being created here, so we're seeing a bit of a pushback from the sellers. But I'm thinking going into NYSE, if we still are trading just at these areas, we could possibly see a push higher. That would completely get invalidated if price rejects this zone and then breaks this structure point. Because at that point, you'd have a rejection of a resistance and then price breaking the bullish structure that was being built on the way up. So that's why we have this area marked off right here in these lows, because we know it's that structure point and that point of interest that it might not be a key level, but it's still a point of interest that we want to be aware of and cautious of. See on the 5-minute as well. Yeah, 5-minute also a clear resistance being built at this area, clear pushback, but still strong momentum. Look at these highs that were being made. And again, what did we just talk about? Where did that push come from? What time is that? 8:30. That's specifically at that time. So we have, again, a little bit more information. We have lower time frames on this strong momentum right now. We're seeing a pause. We're seeing some pushback. How do we set ourselves up? Well, we have these lows. If you have price rejecting the highs and breaking these lows, that is going to, again, in terms of probabilities, that increases your chances of you correcting that move, maybe doing that pullback into these lows here. If you're not breaking these lows, still trading above your area of interest and breaking new highs, what chances of price going up like do you have there? I would say it's stronger chance, right? Stronger probability that price will make a move higher. Because remember, we move without looking for certainty. We're looking for probabilities in our favor. That's what we're doing when it comes to these markets. Right now, still, this structure point is the area of interest where price can pull back on the lower time frame, still be bullish, and then continue to push higher, because this high came from these lows. Unless we break out right now higher, we won't pay attention to this as like a point of interest on the lower time frames. Right now, it's just price creating a slight pause. But until we break out higher, this won't be, let's say, a more important area, because it's on the lower time frames. It's on the 1 minute. We don't put too much importance into that, but we do pay attention to those reaction points. Because again, look at how, for example, on the 1 hour, you have just a candle closure, but on the lower time frames, you had a break and a retest and and then you had the continuation, right? The breakout and the retest, you see that on the lower time frames. Gives you a little bit more confluences rather than only looking at one specific piece of information. And then, of course, we're approaching an area of interest here as well. So I would say, honestly, at this point, let's be objective here. Let's not stay stuck on yesterday's price action. Let's mark off these highs because it's the high that was created for us there. Very clearly. And that's the area that we're approaching now. At this point, if you're looking for buys, I don't want to sound rude, but you're chasing buys at this point, because we were talking about buys since down here, or at least above these highs. You don't want to be trying to chase a buy when you have a very large range to do a pullback versus not that much of a range to have a continuation. Does that make sense? You have to always look at it in terms of risk to reward. Risk to reward is going to be your best friend. A lot of times, when with risk to reward, it's honestly it's something that's very overlooked, and honestly something that we don't talk about. We haven't gotten into those topics yet, but I would love to slowly start talking more about risk management and risk to reward and that sort of trading talk. Because even so, a lot of times you might have, or at least for me, I speak from my experience and what I've done and what has worked for me. But when it comes to trading the markets, you can have technical confluences, fundamental confluences. But if your risk to reward is bad, for the most part, I'm not taking that position. I'm not looking to be a part of the market if my risk to reward is not in my favor. Because although my idea might be correct, I need to have risk to reward be favorable for me in case I'm wrong, maybe right now, you know? So if you're looking at, that's why when you're looking at, let's say that's why when we look at opportunities on a day-to-day basis with our market, like with our market analysis and what we do, if you guys haven't noticed, we look for the same things over and over and over and over again. We're looking for the continuations, which are those breakouts, and we're looking for price to do pullbacks in our favor to have then continuation of a trend, right? That's usually what we're doing. We don't make up trades or like make up things like that. We're always doing the same thing. Okay, well, if we're bearish, where can we pull back to that could be favorable to then continue to push in our favor? Or where can we break below, because we're on a bearish bias, for us to have more confirmations that price is going to be building further momentum on that side, right? And you can look to take advantage of further moves in the market as a day trader. So that's why you have to have risk to reward be always in your favor, because again, your ideas might be correct, your analysis might be on point, but your risk to reward, if it's bad, you could get caught in price action just doing a pull. But like if you're looking for buys and you ask yourself, okay, where are the most favorable buy position? Would it be here, or would it be here? When you're looking at opportunities in the market, don't pay attention to the TPs and the stop losses. I'm just saying the price points of where you would want to take those entries, or let's say even here. All right. When you're looking at the market like that, now you understand a little bit more. Well, if price action has this clear key level and this clear reaction point, that's where I'm going to look to take a trade, because I know if price gets to this area and I put a buy position because I have confluences in my favor, but it starts to trade below my range of interest, or this price point of interest. Historically, price in the past has pushed lower when it trades and closes below that area. Why am I gonna, as a buyer, why am I gonna fight that? But you make that decision right here. It's very close. Like you don't have to risk all of this. You don't have to risk that much, right? You can have price maybe make a low here, start to build back up, and then you can put a stop loss below that low. So if that low gets broken, that's invalidating that trade. But look at the risk to reward that you have here. A 1 to 4, let's call it, versus if you're looking for maybe a trade at those highs like I was talking about. At that point, for you to be wrong and for your idea of continued buys in the market to be truly invalidated, it would have to be with price trading inside of that range like we were talking about. Look at how much your risk to reward obviously changes. This is an extreme example, but it's literally where we mentioned, hey, be careful if you're looking for continued buys as price is approaching a zone. You don't have the risk to reward in your favor. So although price action, let's say even right now, can stop right here where it's at, look at still the risk to reward that you would have had. Like it's not favorable. You're gonna risk price action doing a pullback in the middle of this range and possibly stopping you out, still being bullish, and then it maybe just gets to this area and then it pushes, and then it gets to this range that you were looking for. Like look at your take profit there. Or if price, let's say, doesn't do a full pullback, you don't take a trade, and you're looking for better trades back above your zone of interest, and you're looking for a repetition of maybe this move right here that took place already. This was still, look at that, over 200 pips. So when we always talk about our specific scenarios, we're always talking about risking about, no more than, 40, 50 pips. And that's, again, I don't even want to say that because everybody has their own strategy, their own way of trading, their own stop losses that they're comfortable with. So if you trade with 10 pip stop losses and you're looking for 20, 25 pips, then do that. If you're looking for a 50 pip stop loss and looking for 100 to 150 pips, do that. If you're the type of trader that has 300 pip stop loss because you're looking for, major moves and you're willing to wait for price to flow like that for hours, then again, then you do that. But at the end of the day, we all talk about the same price points. We all look at the same time frames most of the time. The dailies, the 4 hours, right? Those macros, those intraday. Looking at more like the I don't want to say like, never mind. I was gonna say something else, but never mind. I was just gonna mention a lot of people I've seen will have like all the time frames and they'll look at all of them. Looking at like 2 hours, 3 hours. They're looking at like the 1, the 2, the 3. Some people I've seen, they do all of it. For me, I like to stay more consistent. Not to say that they don't work. It's just more so what, at least for me, the system that I've built. So for you, you need to build that same system, right? We can still have the same ideas, same levels, but maybe you're more comfortable with looking at the 3-minute time frame or whatever the case may be, when it comes to the lower time frame talk. But for the most part, the 1, the 5, you keep it neutral around there. 15, 30, right? It's kind of like in favor of most candles. So yeah, risk to reward is very, very important. Whenever risk to reward is not favorable for you, that usually just means don't take the position. The best positions you take are those positions that okay, either I'm wrong right now or the market starts to move in my favor. And usually that's price action giving either a breakout and you're looking for momentum and you're looking for continuations. Basically what happened here. If you're a momentum trader and you're looking for price action to do a breakout today, this is what you want to see. You want to see the breakouts hold and have continuations. You don't want to see a breakout and then the next candle does a full pullback and it engulfs and it starts trading back below the zone. That's not ideal. That's why I've always told you guys, as breakout traders, you have to be quick when it comes to the market because you're looking for momentum now. You're looking for the breakout right now. You're not looking for price to break out and pause. That's not the idea of a momentum or a breakout trade. When you're looking for momentum or those breakouts, you're looking for stronger volatility, stronger volume, and stronger price action. Days like economic data are good days where you have more volume. Those are going to be days where chances of us seeing a breakout might be stronger. For a breakout trader, wouldn't that be a sign to maybe look to see how they can take advantage of more moves during those more volatile days? If that's the way that you trade and you need volatility, then then you need to learn how to control it. You need to learn how to at least analyze it, because that's what you have to use for you to be for you to have more favorable conditions, right? Whereas the trader that might be looking for price to do a pullback, a pause, a retest, they're looking for price to get to an area of interest. They put a stop loss at a certain price point where they know if we're breaking back below this price point, we're now, let's say, if anything, like to give you guys the example, if you're looking for, let's say, reversal moves or pullback trades, right? And you look, for example, for something like this, where you have, this is like a good example, where you have on one end, let's see, you guys can see that? Okay, yeah. So just to give you guys an example of something that I like to see or what I consider favorable when it comes to like bounce plays. A lot of times when you're looking at rejection plays or those rejection trades, you're looking for pullbacks, meaning that price action a lot. Let's say, although it may be bullish, right? That's an arrow. Although it may be bullish, when you're already bullish and you're waiting for price to pause and do a pullback for more favorable price points, so you look for a break and retest or a pullback trade, you want to see price action pull back and then give you rejections. When you analyze that, you see that price action on its way down it was creating a bit of bearish structure, wouldn't you say? Right? That's the way that price was moving on the way there. So what I like to see or combine and add confluences together is rejections at your lows. That's obviously the most ideal thing. That's what you need, right? But then further confirmations come from structure points, which for example would be price action trading above this area. So you have increased chance that price is going to push higher, or at least that if price is breaking structure points, the pullbacks can take place. But now you're creating pullbacks and you can just continue to go further. So here you have that example where price, look at how here it starts to reject the area multiple times, but it doesn't really break the structure and it just stayed paused, right? You break the structure and you do a pullback into your same area of interest, and then you have your move take place. And then look at how structure then starts to flow. At that point, when you're analyzing the market, let's say you're in the buy position and you're here, instead of you sitting here and being nervous or not understanding what needs to happen and you're like completely freaked out, just look at structure. You want to make sure, okay, well, if I'm looking for buys at that area of interest, I don't want to see price action trading below my range. Because if it does, that means that price action is just flowing to the downside. I can't fight the market. I'm not going to continue to look for buys at that area. So you need your rejections. That's for one, of course. But then as you're in the trade, look at the structure points. Okay, you broke that structure point. Where do you have now? A new structure point. Now price is creating a new low. You still have this as your main area of rejection in case price is pulling back. But at that point, again, you're still analyzing. Now you have price building and creating a new high. So again, you understand that price action is still moving in favor of those buys until you start to see that structure start to get broken, which is, for example, these structure points, and you see price now breaking that, which is basically killing the momentum that you're on. So you're killing the momentum and now you're breaking the structure. You're failing to build back above your area of interest. And then you see price action just doing further pullbacks going against that, right? But you see those signs and those subtle shifts in price action and momentum on the lower time frames, like I've always preached to you guys. And then, of course, today, other than the fact that we were rejecting this area, what helped it was the economic report that we had here at 8:30. And we now have this price action. Highs, lows, highs, lows, highs. Let's see if price is going to go and retest these lows here, reject, maintain above, stay closing above that area of interest for a possible retest of these highs, which gives traders a chance to take advantage of 50 pips, 100 pips, 150, 200 pips, right? In terms of like where the range and where price has just now given you that move, that's that. What invalidates that? You have price action getting to your lows, and instead of pausing, it breaks lower, starts to stabilize and close below. It's failing to push higher, and it's just continuing there. That's where you have your invalidation. For you as a trader, you need to objectively be able to look at the market and have that sort of understanding so you can manage your risk properly. Good morning, Marcia. Connie, let me see. How do I get the gray box to mark up the zone where I can just click and drag it so it goes all the way across the chart? Do the rectangle, which is, I think, over here. Yeah. So if you go to the paintbrush on the side of your trading view, you have this paintbrush. If you click this pop-up window on the side right here, this little window here, you have your shapes and then you have your rectangles. When you put out a rectangle, just put a random one, doesn't matter. Just double click it on the rectangle, even if you could just go on to whatever rectangle you have. Just double click it. If, for example, you do like, because usually a lot of people will have it like this. And it's just like, this is cool. Like I used to do my analysis like this, and I would just like mark up certain zones and like I wouldn't mark up anything at all. But then as I became more of like an intraday trader, I saw the importance of understanding previous price points and using that in my analysis. So again, if you have it like this, just double click, and then you have it on style, where you can extend left if you just want it to be extended left, or you can do both. For me, I do both because I want to see if it has reacted at that area in the past. So I have that immediate look. I don't have to extend it myself, right? I just put out a zone and it goes left and right, and I don't have to do anything myself. And then also for tomorrow's price action, these zones will already be here. I'll see whether or not price respected those areas or not. And then that way it's just easier. And then every other day, like today, like we do every day, we move the zones slightly, little by little, you know, based off of the new price adjustments. That's all we do. So today we moved our zones a little bit and we added a new one, right? Like we're not doing a deep dive, top-down analysis, you know, 20-minute analysis every day. The most things that we talk about, why we, let's say, talk about the market so much in depth is really because we go deep into like the market structure points, you know, and we really talk about that. And especially us diving into the lower time frames keeps us busy there. And we only got to do that for like 2 hours, maybe tops. US30 just absolutely. It's at all-time highs now, isn't it? Yeah. But yeah, so US30, our analysis was still on the bullish side based off of every time frame that we were following. We had just this area of interest right here that we were pausing or showing some signs of reaction. But how we do every other day, what we were following was the structure. We had the momentum on the lower time frame clearly towards the upside, especially after that strong push that you had post the economic report that was more neutral, let's say favorable. And then you had the push towards the upside here. You had price action creating lows, highs, lows. Look at how, again, structure still being respected. If you want to look for breakouts, you have your price above your zone of interest, above previous highs. I mean, there was absolutely zero drawdown on US30 right here as you took trades above this area right now. As NYSE is opening, we want to just be cautious of the volatility. Like I always say, we already saw another continuation into these all-time highs. But still, just by analyzing price and understanding how volatile US30 can be, we could easily see a push into these lows. As long as we're still remaining above our area of interest, our main zone, we're still going to remain on the bullish side. What's ideal, like we always talk about, is not going to be continued price pushing above the 52,200s. So that way we have stronger chance that US30 can go and create possibly new highs. We already had our main move take place, which was buys above this area of interest. Ideally, we always look for a range to range. We don't always get that, but today was one of those days that we definitely saw that push, and it was very, very clean. So US30 was very clean analysis there, and that bias. Gold, pay attention as gold has now is pulling back into this area. Let's watch those lower time frames and see if we can have those continued pauses, no candles, no major signs of candles closing below your zone, right? And that way we still have price action moving favorable in terms of highs, higher lows, highs, higher lows. Again, increased chances of us seeing continued pushes towards the upside. Drink some water here. But all right, so the initial 5 minutes, the 5 minute candles closing post NYSE. So let's look at that on US30 first. We have 5 minute candle closing bullish, but with a strong rejection at this area of interest, right? This major high that we had here. So we're still bullish. Momentum is still very clearly pushing towards the upside. Unless we start to see bearish candles forming here, that's going to be that red flag that price can do that pullback. Other than that, just don't fight the momentum. See if price again respects these lows and goes and breaks out higher. Once we start to go against that structure, we'll be worried about price action maybe doing a bit of a reversal against us. But to be fair, the move that we were already talking about in terms of, like, let's say trades for the day, if you took this trade right here, even again, like I always tell you guys, it doesn't have to be the entire move. You can't have that sort of expectation, but you should have ways to take advantage of moves at zones of interest where it can be favorable for you, where risk to reward is in your favor, exactly like we were just talking about a few moments ago. 5 minute on gold, we'll see if it's still holding above. We have now this new candle having some strong reactions here. Let's see in the next 30 minutes just how that candle will close and see if it's favorable or not. But so far, again, the reactions very, very precise. So pretty clean market movements so far today. What a reaction off those lows. That was like precise too. Look at the 1 minute. It said it literally tapped it and just flew. Literally, this is already like more than 100 pips in 2 minutes right there. Yeah, nice move on US30. Good moves on gold already. Like that's already, like, when you look at it again, let's talk about that in terms of risk to reward. Like where you would have a stop loss. This is already a push at about a 1 to 2 precisely, about 120 pips. Because again, how we were talking about earlier, if you're looking for trades at a certain area, where are you going to look to invalidate that? If you're looking for a pullback into the zone and price is pushing below a previous low and back below a range, you shouldn't really be looking to fight the market, right? So that's over a 1 to 2 right there that it just pushed right now, but you have overall targets of more than a 1, or basically a 1 to 3. If it goes to the full zone, a 1 to 4. So when you look at that in terms of risk to reward, and you have confluences in your favor, right? Like technicals, fundamentals, you have risk to reward in your favor. You have those check marks listed. Is that a reason or not to take a trade? Those are those questions that you have to make sure you're clear of when you're taking trades. Because if you're confused in any of those, then you're gonna be confused when you go to take the trade. There's gonna be a little bit of lingering doubt in your head, because when it comes to this, is real. This is investing at the end of the day, and you're putting your money at risk. Whether you're trading a live account, some people trade prop firms, both are risky. In my opinion, there's no better experience than a live account, because that's your money. That's your $50, $200, $1,000 that you're putting at risk. It's not a, how I like to say, a silly prop firm. Because although prop firms can be, let's say, good, for the most part, trading itself is already hard. Imagine trading with restrictions. That's like, it's even harder now. Your odds are way more against you now. So again, keep those things into consideration when you're taking trades. So that way, if well, you know what, I am kind of scared when I take a trade. But at the same time, if you're real with yourself, you're not too technically aware. You're not paying attention too much and you don't care too much about it. Or you might be sort of good at technicals, but you're completely fundamentally unaware, and you have a little bit of doubt because you don't really know if what you're doing is good or not. So all those things play a major role in a part in trading. Oof, excuse me. But all right, guys, we'll do our stream today until 10. All right, guys, I have a question for you. I want to see if who's paying attention, and make sure you guys are live. Right, remember to click that live button so you're not delayed, because it's already a bit delayed. You don't want to be even more delayed. But I want to ask you guys a question in the chat. I want to see who can answer. I want to know for today on gold. Let's talk about gold only. For gold specifically, who can tell me the game plan for today? Like, who can repeat that? So that way, like in a way of a review. Like if you had to do a review of today's session, how would you write that up? What did we prepare for and what happened? Did that play out? Was that a good analysis? Was that a good bias? Was that bad? Did we prepare for buys? Did we prepare for sells? But I want you to be detailed. Tell me we were looking for buys here, we were looking for sells here. But I want to know precisely what we were looking for today, okay? I want to see who can tell me that. Let me see. All right, well, let's watch price action here. We have the next 15-minute candle closing soon. So let's watch and see if that 15-minute can still hold above. We're doing a retest of this area right now. Still kind of trading just at that zone right there. All right, let me see. All right, no, you know what? I appreciate that. Yeah, that's more of what I was looking for. Pretty much on point with what Elijah was saying. So Elijah said this, we saw the data coming out neutral, telling us there won't be much impact, but when we saw buyers step in after data, we waited for price to break bearish structure, making new highs and retesting it to enter. Let me see. All right, so I appreciate you guys answering. I'm gonna see if it's possible to give a giveaway to the 3 of you guys that were answering me. Okay, so Kim Allen, I believe uplinked, and Elijah. Text me on Instagram, text me your IDs, and I'm gonna see how much I can send out to you guys each for giving me that that effort on the chat. And I appreciate that. Because that's what I was looking for. Damn, IV, you were a minute late. Damn. But that's what I was looking for. Thank you guys. I appreciate it. So you guys, my Instagram, I'm gonna see if I can send you guys at least $150 each. Just because I've seen you guys show up. I've seen you guys put in effort. You're paying attention. You're basically stating, giving me a review of what we were doing, which again, I highly appreciate. So text me on Instagram and I'm gonna see what I can do for you guys. All right. And again, thank you. But Ivy, yeah, I appreciate you answering as well, man. But I wanted to catch you guys by surprise because you know the quizzes sometimes maybe you guys can cheat. But I figured, you know what? If I'm gonna do a weekly giveaway this week, I'm gonna give it to someone that can show some genuine support in in the community. But even to all of you guys, again, I'm not trying to say anything bad about those that didn't send me the analysis. You guys obviously don't have to do anything that I tell you, but if you're gonna give that extra effort, I'm gonna try my best to give that extra effort for you guys as well. So you give support, I give support as well. So thank you all. But then also for those of you that go the extra step, a little bit more effort, text me on Instagram. You send out analysis, you send out ideas, you talk in the chat, you keep the community active. So I give you guys a little bit of more effort there. Yeah, gold is still we're waiting for mainly I would say like this 1 hour candle to close, but like so far everything's still favorable. Like 30-minute looks decent as the way that it came into the zone and is rejecting. 15-minute as well. In the next 9 minutes, we'll see if this holds. Ideally, we stay bullish and we can continue to just flow above our area of interest, but we also don't want to sit here and force any sort of ideas on the market. To keep it simple, like we've talked about already, if we start breaking below this zone, we start seeing candles closing back below that area, let's not even fight that. Let's wait for either further confirmations above this area of interest or adapt back to sells below this zone. Because we cannot forget about how gold is bearish on those macro timeframes. But that's why I was asking right now that question. What were we looking for today? We were looking for possible pullbacks and adapting to bullish price action above our area of interest because of the data coming out more neutral, mainly really showing no major signs of increasing inflation, right? Again, not adding on to that fire that's been driving the markets. That's mainly what we were looking at right there. So it was a clear plan. It was a clear bias. We knew what we were looking for. We knew what we were waiting for, and it played out beautiful right here. Even right now on these pullbacks that have been short-lived, have those pullbacks because of the probability, the bullish time frames, or excuse me, the bullish conditions that we got after the economic data. Again, even those 100 pips that took place right there in like in like 5 minutes, that was already good moves. So you always forget me. Sampath, no, I don't, brother. You didn't send anything, man. You didn't say the analysis. I was waiting for it. That's why I gave you the chance. I told you guys to go live. I asked you guys the question. So again, to see who can show genuine interest. That's all. That's not saying anybody else is bad. I wanted to catch you guys by surprise this week instead of doing a random pop quiz. Maybe next week will be a pop quiz. Maybe next week I'll ask you guys, hey, let me see who can send me an analysis. And whoever sends it to me first, I'll send them the entire giveaway. You get me? So but like I said, man, I appreciate you all. But all right, just a few more minutes until we have, about 6 minutes until we have the new hourly candle closing. We'll analyze price there. On US30, I see that price is now breaking below structure points, failing to break out into new highs. We're also failing to break even into this zone here that we have. And so we're now on the lookout for prices to maybe do some pullbacks into this area of interest. Only possible buys now would be back above this zone, or if it does that full pullback and rejects this area here. All right. In gold, in the next 6 minutes, we would need for this candle to close bullish at least above this area of interest. If we're not seeing that, then we're seeing price action basically just creating a large wick, and you have price action basically faking out buyers or showing signs that the buyers that were pushing price in this area are not strong enough to hold that. So again, no reason to fight that. If you're trading back below the zone and showing a clear rejection of those highs, then again, don't fight that. Look to see whether you adapt or whether you sit out or manage risk, whatever the case may be, right? But we need for price to be trading above this area here. This 30-minute as well, ideally trades above this zone here. 15-minute, 5, same thing, especially on these lower time frames. Like these 5-minute time frames here, within the next 5 minutes, if we can start to still see price closing above this zone, that's valid. But as of right now, we're back inside that range. We've now basically corrected the entire move off this new 1 hour that we're on right now. And we're showing signs of a strong rejection. So again, beware if you continue to see price closing back below that zone right there. So no reason to fight the market there, especially after getting those moves that already played out, which was the breakouts, the retest that was aggressive. The retest happened in like 3 minutes. It was an aggressive retest, 3-minute play, and then you haven't had the continuations. And now price is starting to flip on us and it's starting to switch out of that bullish momentum. So like I've told you guys before, don't fight the market, adapt, watch price action and let it do as it does without you forcing an idea onto it. Again, especially after those ideas have already played out during your session. Don't let FOMO or revenge trading get in the way of your trading progress. If you missed out on certain moves, find out what you could have done better. You live to trade another day. If you took early buys and you took profit, you get to walk the day with profit. If you were looking for buys and maybe you didn't take a profit and you got taken out break even, you live to trade another day. If you take a loss because you were looking for buys and price broke below your stop loss, it was a controlled loss, you live to trade another day. You get me? Don't steer into that other pattern, which is revenge trading and over leveraging, FOMOing into trades. You take buys, you lose, and then you start chasing sells, and then price pulls back on you and it takes you out, and then it's just randomness, and then it doesn't play it out in your favor. So avoid doing that in the market, and you should be well off. US30 right now doing a full pullback into our zone of interest and showing now early reactions on the lower time frames. But again, we ideally see more candles closing in our favor. These are those initial reactions. It's an aggressive play right here. You can consider this the aggressive rejection it's having right now. Same play as gold. You don't want to see price closing and trading back below your zone of interest, because at that point, then that rejection would not be holding. You don't want to fight the market. Can't believe this education is free. Damn right. And it's going to continue to be like that. So got into some high risk sells at the 40-22s. Sheesh. Sampath, I appreciate your support, man. Thank you. Trust me, I see it all, man. I know who I have in mind. I know who shows up. I know who's active. All those things I keep in mind as we go on. And again, it's not the last week that we're going to trade together. We're going to continue to trade smarter and better. Think about what we've done right now. Imagine us doing this every day, objectively looking at markets. Like, think about how on one side of the market, we're following it and being objective about it, and then just taking it step by step, level by level, without being boastful about it. And as price pulls back, we still know what we're looking for, without boasting of the rejections or of the bounces of that. We point it out, same as we point out when price is breaking the lows and going against that structure. So that way we can set ourselves up and be objective without having to sit here and be like, damn, I was talking about buys earlier today above this zone, and now price is trading below here. I might look silly, but again, because we don't do that, we're not focusing on predicting the markets and we're more so following price action. We objectively look at the markets and now we know we're killing the momentum. Clearly, we're trading below our zone. Clearly, we have that. We can objectively see that. That doesn't mean that price later on can't exhaust randomly, let's say here, and push back above your zones of interest and see further pushes later today. You don't know what can happen later in the market. So you don't know if prices are going to just stay paused at this zone right here and not do anything, right? But again, rather than you having to sit here and try to be right or wrong about a certain idea, just watch the market as it gives you your reactions and as it gives you your moves. So that way, when you're looking at buys here and prices moving in your favor, you know how to manage your risk and your trade accordingly. If you're looking at buys here and price does this, you know how to manage and you know how to manage your position correctly. Excuse me, got a little bit of a tongue twister. Same as if you're taking a trade here and price is maybe not breaking above certain highs, it's now breaking certain lows. You're not fighting the market, you're taking for what it is. You have to manage your risk. You have to sit out. Your trade idea gets canceled. Now the sellers have more momentum in their favor because you're now trading back below a zone. The momentum is now on this right here, so you would have to kill that momentum, trade back above your zone if we're going to see stronger signs of further pushes up. If not, anything below here, you're now on this bearish momentum. You're now trading back below your zone. You're now back in favor of the daily and the 4-hour being bearish below an area of interest, but you objectively look at that without fighting the market. So that way you can follow the market good on when it's in your favor. You can follow the market just as good when it's not in your favor. And both can be controlled. Make sense? But all right, guys. So 10 a.m., the hourly candle has closed, and on the 1-hour candle on gold, although it's still, we can see, like I was just talking about, we still could see pushes above this zone of interest right here. I would be cautious as price is trading below that zone. So make sure if you do start to see price getting back above that zone, make sure you watch your candle closures. Make sure you watch where price is trading and closing above. Like make sure that, okay, if you are trading above the zone, look for price to break those structure points for you to have further momentum in your favor so you can hold on to your trade or look to take profit, whatever the case may be, right? But that's that. Other than that, we know we have to be beware of price pulling back below this zone of interest here. US30 gave us that nice rejection. It has given us pretty much 90% of the move that we were looking for earlier. So that gave us the breakout, the retest, and we'll see now if we can get the continuation above. That's the home run for the day usually. When we have the breakout, the retest, and then the continuation, that's like your 3 ways that you could have taken advantage of the market, and all of them took place. The breakout, the retest. Now let's see if the continuation happens. Gold took only did the breakout and the retest. The continuation didn't take place, and then you broke below that structure point. So it was like 2 out of 3. Still good. Still good. The days that are okay is the day where you maybe just have the breakout. You know, that's where it's like, okay, the breakout was cool, but price broke back below, didn't give us further confirmations. We didn't really get much. The worst days are when it's like you don't get nothing. Those are the worst days. Because even when you're, and I say in the sense of like when you just range or you just like at a price point and it's like up and down at the same area and it's just like, bro, you know. Gold will be tricky. If gold just did this pullback here to then just continue pushing higher, that'll be very annoying just because of how that 1-hour candle closed. Like if gold pushes higher right now, it's like, come on. Why'd you have to reject and then all of a sudden, within the next couple of minutes, you just now completely push towards the highs? Those are the annoying days because it's like, damn, in terms of price action, you had signs of rejections and not really too much favorable conditions. For then you don't really get too many confirmations again, and then price just goes without you. Those are those days that can get annoying. The good days, it's like, okay, well, maybe it didn't go in my favor right now, but I can get further confirmations later today, you know, and you can trade later in that day. But Other than that, guys, I think US30, highlight of the day. Even gold, honestly, was also a highlight with that breakout that took place. So both analysis from today were pretty much on point. But yeah, guys, as always, let's end our stream here. Let's call it a day. Tomorrow we will be on for let me see. Sorry, I don't think there's yeah, that's what I thought. Yeah, there's nothing going on tomorrow. And then let me see for next week. Yeah, next week will be important. Next week will be NFP week, so next week we can have some nice action. But thank you guys again. For those of you that I told you to text me on Instagram, just make sure you text me your IDs. I can't give you guarantees as to how much I can give away, but I'm gonna try to give away for those of you that won that giveaway for today. All right, guys. So thank you guys once again. I'll see you guys tomorrow, same time, okay? 8:30 a.m. Eastern time. Take